Yes.
Yes,
So
ma'am.
Yes,
in this
ma'am.
class, we are solving with the question 2. The question goes like this: a company expects a net income of rupees 1 lakh. It has rupees 2,50,000, 8% debentures. So this is nothing but your market value of debt. The equity capitalization rate. The equity capitalization rate of the company is 10%. Calculate the value of the firm and overall capitalization rate according to the net income approach. So this question has two components. We need to calculate the value of the firm as well as calculate the overall capitalization rate. So first let's calculate the value of the firm, where value of the firm is equal to S plus D. So V is equal to S plus D. We have the value of market value of the debt. So we have to calculate what now? We have to calculate the market value of equity. So market value of equity is equal to what? Earnings available to equity shareholders divided by equity capitalization rate. So earnings available to equity shareholders is not given, whereas the information to calculate earnings available to equity shareholders is given, for which you have the net income given. So we need to calculate from the net income amount available to equity shareholders. Am I making sense?
Yes,
Yes,
ma'am.
sir. So now
Yes,
we are calculating calculation of amount available to equity shareholders. So how do we go? We go with the statement format, for which we need to prepare statement. So first we take net income. Net income. So net income as given in the problem is 1 lakh. From this we are going to minus. Your net income is nothing but your EBIT. So first we are going to minus the interest. So how much is the interest? Interest is going to be, interest is paid on debentures, right? What is the amount of debentures given in the problem? 2,50,000 into what is the rate? 8%.
20,000, ma'am.
2,50,000 into 8%. How much you're getting?
20,000.
20,000. So that will give you how much? 1 lakh minus 20,000 will give you how much?
80,000.
80,000. Now, do we have interest? If we have interest, we can minus. But in this, I mean to say tax. Do we have tax in the problem? We don't have tax in the problem. So as such, what we are doing, we are ignoring tax, right? So as we are ignoring tax now, the next who is eligible to be paid? Preference shareholders. Do we have any preference shareholders?
No, ma'am.
So this is going to be the amount available to the equity shareholders. So this is the final amount available to the equity shareholders. So you can call it as earnings available to equity shareholders, or it is amount available to equity shareholders. I've written it in short form. Right? Now, to calculate the market value of equity, you require earnings available to equity shareholders divided by equity capitalization rate. We have calculated the amount available to equity shareholders, and equity capitalization rate is already given in the question. It is 10%. So we can calculate now market value of equity. So market value of equity equal to 80,000 divided by how much percentage? 10%. That will give you equal to answer.
8 lakh.
That will give you authentication. 80,000 divided by 10 into 100. I want an authentication by somebody else.
8 lakh, ma'am.
8 lakh. So market value of equity is 8 lakh. Then your market value of debt is how much?
2,50,000.
Market value of debt is how much? Given
2
in the
lakh.
question. It's already given in the question. It is 2,50,000. Now you can calculate the value of the firm. Value of the firm is equal to S minus V. So this is what? This is your S and this is your D. So S plus D is 8 lakh plus 2,50,000 would give me
10,50,000.
10,50,000. So you have calculated the value of the firm now. So your first part of the answer is done. Right? Value of the firm is done. And now what we are going to calculate, we need to calculate the overall capitalization rate. Right? So how do you calculate the overall capitalization rate? So your overall capitalization rate is equal to, the formula is, you can take down, overall cost of capital. Is the font size visible? Overall cost of capital is equal to earnings divided by value of the firm. Earnings divided by the value of the firm. What is the earnings? Earnings of whom? Earnings of shareholders. What is the earnings that we have now? How much you have calculated? Market value of equity shares.
80,000. 8 lakh.
Equal to 80,000 divided by the value of the firm just now we calculated was
10,50,000.
10 lakh.
1,000.
What is the earnings? Total earnings, not the thing. Net earnings. What is the net earnings that you have here? Net earnings. Earnings is not amount available to equity shareholders. Earnings here is because you are calculating the overall cost of capital. It is not the earnings of only equity. It is the total earnings of the company. The total earnings of the company here is 1 lakh divided by what is the value of the firm is 10,50,000 equal to 1 lakh divided by net income is 1 lakh. The net income is 1 lakh. Here we are not talking about earnings available to equity shareholders because it's overall cost of capital. So we are talking about the net earnings of the company. The net earnings divided by the value of the firm. Value of the firm just now you calculated. So 1 lakh divided by 10,50,000. So how much you are getting? Overall cost of capital is
0.095.
0.095.
0.095 or 0.0.
It is expressed as a percentage because we are talking about cost of capital. It is always expressed as a percentage.
9.5
So it's
or
going
10.
9.5%. Is it done? So this is the first part of your question. So this question has two parts, A part and B part. Now let's move on to the next part of the question. Yes?
Yes, ma'am.
This is the A part of the question. Now we will move on to the B part of the question. Is the font size visible, students?
Yes, ma'am.
Yes, ma'am.
Let's look into the view. If the debenture debt are increased to rupees 4 lakh, it was 2,50,000. Now you are increasing to how much? You are increasing to 4 lakh now. So if you are increasing to 4 lakh and the rate of interest would be the same, what should be the value of the firm and the overall capitalization rate? Did you understand? The second part of the question says that others remaining constant, only debentures when they are increased from 2,50,000 to 4 lakh with the same cost of debt, what would be the value of the firm and the overall capitalization rate? Did you understand? The
Yes,
net
ma'am.
income is the same. Your debt is going to be increased to 4 lakh the rate of debt is the cost of debt is going to be the same and the capitalization rate is going to be the same. Then what is going to be the value of the firm and overall capitalization rate? So we are calculating the value of the firm keeping in mind NI approach, net income approach. Okay, so net income approach, the value of the firm is calculated with this formula, that is V equal to S plus D, where S is said to be the market value of equity shares and market value of debt. So given market value of debt is how much? It is increased to rupees 4 lakh. Now, market value of equity is equal to amount available to equity shareholders divided by equity capitalization rate. So to calculate the amount equal, is there any change in the income? If the income is changing,
No,
then
ma'am.
the amount available to equity shareholders would change. But here it is not changed. So our amount available to equity shareholders remains the same. Yes or no? Yes or no?
Ma'am, but interest will be different, ma'am.
Very good. Your amount available to equity shareholders would change because the debentures have been increased. Very good. Who was that?
Sony, ma'am.
Very good, Sonu. So at least one is online listening. So otherwise, whatever I would have put on the screen, you would have taken. So now market value of or market value of equity is going to change. It's not going to be the same because the interest rate is going to change. So we are going to calculate the market value of the equity. I hope all of you have understood. Yes or
Yes.
no?
Yes, ma'am.
Yes, we have to calculate the new. So we are going to have net income. So we are going to prepare the statement, right? Net income is 1 lakh. Less interest is going to change. So less interest. So interest is equal to how much?
4 lakh into 8%.
Your debentures are increasing. So your interest amount will vary. So it is 8%. So 4 lakh into 8% would give you
32,000.
So it's 32,000. 1 lakh minus 32,000 would be
68,000. 68,000.
somebody else can authenticate it. 68,000. Now
Yes, ma'am. It's
from
68,000.
this we actually minus your debt. I mean to say in tax, but we don't have tax here. They have told us to ignore tax. So this is going to be the amount available to the equity shareholders or earnings available to equity shareholders. Is it clear here? Is it clear?
Yes, ma'am.
Okay, so our amount available to equity shareholders is coming down 68,000 because debt is increasing. We have now what we are going to calculate. We have to calculate what we have got the amount available to equity shareholders, but we have to calculate the market value of shares. So market value of equity share is equal to what? Market value of equity share is equal to amount available to equity shareholders. Just now we calculated 68,000 divided by equity capitalization rate is 10%. So 68,000 divided by 10 is
6,80,000.
so this is going to be equal to 6,80,000. So your market value of equity is calculated 6,80,000. Now you can calculate the value of the firm. So value of the firm is equal to S plus D. That is your market value of the share is 6,80,000 plus your debenture value is how much?
4 lakh.
4 lakh. So this is equal to
10 lakh
10
80,000.
lakh 80,000.
10 lakh. So your 10 lakh 80,000 is the value of the firm. And now you are supposed to calculate not only the time value of the firm, but also overall cost of capital. How do you calculate the overall cost of capital? The formula to calculate the overall cost of capital is earnings of the firm divided by the value of the firm. So earnings of the firm, is there any change in the earnings?
No,
Is there
ma'am.
any change? No. 1
Yes,
lakh
ma'am.
divided by? Not in the earnings of shareholders. It is the total earnings. The net income of the company is the same. Divided by value of the firm is 10 lakh 80,000.
It's 9.25%.
9.25
25.
is equal to 9.25%. So if you're increasing your debentures from how much?
2 lakh 50 to 4 lakh.
You're removing your debentures from 2,50,000 to 4 lakh. Your value of the firm increases or decreases. It is 9.5 when it is 2,50,000 and it is 9.25 when it is said to be increased to 5 lakh. Now, what does NI say actually? Net income approach says that there is a relationship between capital structure and the cost of capital. When you increase your debt, your cost of capital should come down, and that's going to be your optimum capital structure. You are increasing in this problem from 2,50,000 to 4 lakh your debt. That means there is a change in your capital structure. You are focusing more on debt, and because of which your overall cost of capital is coming down by 0.25%. Have I made it clear?
Yes, ma'am.
So that is what we are trying to tell through NI approach. Yeah, so through NI approach says that change in the capital structure leads to change in cost of capital. So NI approach propounds that change in capital structure leads to change in cost of capital. So that is what we have proved in this particular problem with the help of this particular